Good morning, Size Traders. This is Amos here with Gary, head trader at SizeTrade. Gary, thanks for being with us today.
Hey Amos, how you doing?
Great, great. We had a podcast last week with Robert, and we spoke a little bit about the fact that you're waiting for a confirmation to believe the breakout. And we had some emails come in to see if you could talk a little bit more on confirmation retests.
Sure, that's actually that's a good topic to talk about. So let's hit that. So the way that I do my trades is I'm more of a technical trader than a fundamental trader. I believe in total for day traders or swing traders like we are, how the majority of us are. Technical trading actually is an easier way and a more profitable way to trade. Fundamentals take way too long to play out, and when they do play out, they don't necessarily play out in the way that you thought they would play out. So I just want to bring out an example. In the late 90s, a lot of my trader friends who were fundamental traders were looking at the market at really overvalued and truly believed that the crash was imminent and started shorting in late 98, early 99. A lot of them got taken out on stretchers, lost a ton of money. Some of them were able to hold because they had a big enough bankroll. But even though they were 100% right that these a lot of these tech companies didn't deserve the valuations, or all of the tech companies didn't deserve the valuations that they were trading at, one of the things that they realized was that timing is more important than being right fundamentally. So going back to us, as traders, short-term traders or short-term minded traders trying to make a quick move in the markets, it's really tough to trade on long-term fundamental news. So even though I believe that the market is overvalued here, even though I believe that the market will eventually crash, I wouldn't suggest to anybody to actually short here because I do think that the easiest way for the market is up. So I have to kind of separate my technicals with my fundamentals, and in my opinion, the technicals always win out. So one of the things that I do when I do trade technicals, when I see a technical pattern or I see my technical indicators line up in a certain direction, is I wait for the confirmation. So I don't think I'm the only trader who does this, but definitely people don't talk about it enough. So when you read up about head and shoulders, bull flags, any type of technical indicator like historically relevant technical indicator, not talking about some of the new ones that are based on a lot of algorithms and stuff like that, but you get a technical pattern and you see it, such as we had last week, a bull flag and or a potential bull flag because we were waiting for the confirmation of the breakout. So when it did break out on the big volume and day when it went up to the upside, I was talking to Robert and I mentioned that I want to see confirmation. So what I do is after the first day of a breakout of any technical indicator, up or down, bullish or bearish, I always wait for a retest or a confirmation. I need to see that secondary move because I would say out of my experience, 80 to 90% of the time, it retests at some point. So it might not be the next day, like it didn't do it last week. But at some point, I would expect us to go back into the 2260 level on the ES, retest the top of the bull flag, and actually see if we can hold that level or not. If we successfully hold that level, that would be a successful retest, and that would be a confirmation for me that the bull flag was relevant. We broke out, and now I can do my measured move to the upside to know where the market is going. If we do retest and we don't confirm, meaning we close below the breakout point, then I'm back looking at the market. It's either a failed breakout, or in this case, a failed breakout of a bull flag, or we're just back into that holding pattern and waiting for it to see if it's going to break out or break down. To me, the confirmation is extremely important. Like I said, 80% I would say of the times that I look at it, we do retest within a week max, 10 days max. The market here is indicated a bit lower. So, I mean, we're trading 2280s here pre-market, low 2280s pre-market. Not sure if we're going to retest on the open or we're going to retest at some point today or maybe retest during the week. But I would expect at some point to retest back into that 2260 level. And more importantly, for us traders to see how we trade is to see if we could confirm by holding that level or if we break through and go back into the range. Now, one of the traders that I mentored actually asked me a question that since 70 or 80% or 80, 90%, whatever the numbers are, depending on which technical indicator we're looking at, retest, would it make sense to short the breakout? And for me, that's just not a great way to trade because again, it could take a couple of days, and within those days, you could get a continuation of that breakout. So you could definitely see a lot of pain before the retest, and there might not be a retest at all, and you have to figure out where to do your stop. And we could talk about how to build a strategy in another podcast. I'm going to talk about that, but it becomes very difficult to build a profitable strategy without knowing really where your stop is and how long it's going to take to retest. So last week when I was talking to Robert, Robert asked me where I thought the market was going, and I went into this blurb about it being a bull flag up here, and then we broke out the day before, and I mentioned that we're going to retest. So that's what I was talking about when we spoke with Robert about that. Um, I still will I. A lot of traders ask me if I would trade if we didn't have the retest, and the answer is obviously yes. So if we continue to see strength and we don't retest, and obviously it doesn't look like a retest will happen, I'll take advantage of that and trade it.
Well,
I just
well,
well,
sorry, Gary, I didn't mean to interrupt you, but would you trade it any differently if whether it retested or didn't retest? Does it make a difference now in how you're going to move forward?
yeah. Well, I'm always going to be kind of cognizant of the fact that there should be a retest, and we probably will retest. Once a certain amount of time passes by, obviously it becomes less relevant. But in the week after, the 10 days after we have a breakout, I'm very reticent to jump in on a trade, at least full strength, if we don't have a retest. And I think a lot of traders get chopped up with that because they see the breakout and they're like, oh, the breakout is here. It's a bull flag, a well-defined bull flag. This is the measured move. I'm going to jump in. I'm going to catch 200 points at upside. And potentially they can. But without that retest and that or confirmation, I don't feel as confident as I would. So it doesn't necessarily mean I'll sit on the sidelines. I'll look for my opportunities to buy the breakout, maybe on a pullback, maybe as day trades, but I'm definitely not going to go full in like I would if we retested, confirmed, meaning we held above the breakout level, and then that would give
Mm-hmm.
me a lot more confidence in my trades.
Mm-hmm.
Another thing that I look at with the confirmation is how do we react when we confirm. So if it just kind of goes through the level and closes below, a lot of traders look at that as a potential as a reversal. So they'll say, "Oh, we had a false breakout of the bull flag. Everybody got long. Now we close back in the bull flag, so everybody's going to get out." I haven't seen enough. I've been trading for 15 plus years. I haven't seen enough information, I guess, for me to feel that on a consistent basis it will do a reversal. So I'm not one of those traders who would trade that reversal. So if, again, for this example, we had a bull flag, we broke out, we never retested, we went a bit higher. When we do eventually retest, if we retest, we come back to the 2260s level in the ES, and we fail. We close below the breakout level. Now, if that were to happen, some traders would see that as a negative and short and think that the top is in. I'm not so reticent to do that because I feel like we could still break out even though we close below it, and I wouldn't want to be long. I also don't feel comfortable being short at that level. Maybe if it behaved bad in the internals, and again, I want to do some podcasts about that, about breadth and internals and how to trade it. But if the internals were quite negative and we would confirm below that level, so meaning we would have two closes below back in the bull flag, then I would kind of think about it and say, hey, maybe there's something to this reversal here, and maybe trade it. In general, I think that the best way to trade is the trend is your friend. So the path of least resistance right now, at least in the markets, even if we're about to gap down in the markets, is up. I I'd like to buy the pullbacks. I'd like to find my levels. I'd like to find my areas. I like to buy the pullbacks. I don't blindly buy them just because we retested. I don't buy it. I look for indicators internally to let me know that it's time to buy, or I'll short the bounces if I think that for a day trade or for a swing trade we could take the opportunity. But it's a lot harder to find the top, catch the top, or catch a bottom than it is to continuously trade with the trend. So that's what I'll continue to do. I mean, We'll see if we do a retest today. If we do a retest today, we'll see how it closes. Is it going to be a confirmation of the breakout, or is it going to be a drop back into the range? If it is a confirmation of the rebound, I might have a couple of shorts just because the near term indicators will be bearish. But on a kind of midterm level, I'll be looking for it to buy it and trade it to the upside.
Gary, thank you so much for your time. I will stay tuned. As always, SizeTrader, subscribe, and we'll keep you updated. Until next time, Gary, thanks so much.
Thanks a lot.